QuickBooks Pro Plus Desktop 2022 OneNote presentation. Cash payment for inventory linked to purchase order or PO. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. If you have access to OneNote, would like to follow along, icon left-hand side, topic introductions, 7080, cash payment for inventory linked to purchase order PO tab. Also take a look at the immersive reader tool, topic introductions in the text area as well. Same name, same number, but with transcripts. Transcripts that can be translated into multiple languages, either listened to or read in them. Same name and number as presentations as well. Topic introductions designed to give an introduction to the topic, provide screenshots, links where applicable, give accounting background to complement the presentations, and can be used to follow along with them if you don't have access to the software at that time. Closing the icon on the left-hand side, we're starting out with our screenshot. Last time, we entered the purchase order in the purchasing process of inventory, noting that the purchase orders have no actual financial transactions, no impact, in other words, on the income statement and balance sheet. Now we're going to imagine to receive the inventory. At that point in time, we typically imagine there's a bill with it. We can use the purchase order to populate either the bill or the check that we write when we receive the inventory at that point. So we're going to go to the purchase order. This is a purchase order we had in the past that we put in place last time, which we're going to kind of link to the payment, assuming that we receive the inventory from it. If we go to the vendor sender, we can see this in Epiphone. Here's our couple purchase orders that we have down here as well that we're expecting to receive guitars from, inventory from, that is. On the transactions side of things, we got the purchase order. If we look at the open purchase orders, these are the open purchase orders we put in place in a prior presentation. If we go to a check and enter a check, we can go to the bill next or a check. We're going to go to the check this time. Next month, we'll go to bills on more of the transactions. We're going to Epiphone. If I tab over in Epiphone, we get this pop-up that says open purchase order exists for the vendor. We're going to say okay. This will then pop up and we can link this vendor to the open purchase orders, which will then populate the information down below based on the purchase order information, automatically bringing that stuff in. And we have then the check number, we got the date, we got the vendor, Epiphone, we have the amount, and then down below we're not on the expense side but the items side of things because we're purchasing inventory items, which will not only be increasing the inventory account but will also be increasing the inventory items, so we can track this information by units as well. So once we record this, we know that the checking account is going to go down because we in essence wrote a check. The other side then is going to go to the inventory, which is going to be going up. If we look at the transactions by account for the checking account, we have the check down here for Epiphone. You can see the check is there. The other side's in the split area because it's going to show up in multiple transactions in the inventory side of things. On the inventory transaction report, if we look at the asset value, we're at the $39,976. That should match what's up top on the trial balance. And then we also have the sales side of things. This is what we're going to sell them for, but these amounts are not on the financial statements. That's what we expect to sell them for when we populate an invoice or sales receipt. And of course, we have the amounts on hand as well. If I go back to the vendor center and look at the transactions and the purchase orders, now those transactions on the purchase orders have disappeared because we're looking at the open items. We still have 3 that are open. Going to the Gibson, writing another check. Gibson, if I put in Gibson and say tab, there's a purchase order related to it. This is them. We're going to select the purchase orders, which will help us to populate the information down below, just as we did before. Here's the amount up top, date, Gibson being the vendor. We're looking at items rather than expenses, so the inventory item is going to be going up, as well as the inventory account. This one also has a customer for the second one, meaning we had the purchase order which was ordered specifically for this particular customer, and QuickBooks has this really nice ability to have it show up all the way through and be billable. Not only billable to pull through to the invoice and have it bring the cost over, but it will actually bring the invoice amount over, the correct amount, when we invoice. So now when we turn around and sell this one, these items of the Gibsons to Music Stuff Store, it will populate as we create the invoice. If we go to the trial balance now, the inventory items have changed checking account has changed once again. If we go to the inventory valuation summary, we're now at the 46,868 in the total. That should match up to what is on the trial balance, which indeed it does. If we look at the vendor center for the open purchase orders, we only have one left. That's going to be this one for Diamond Head. We're going to create one for Diamond Head, assuming we receive those ukuleles, and we're going to say yes here. We're going to click off the purchase order to link it in, and there we have another item. These are the ukuleles. We got 3 of those. These are going to be increasing once again the inventory, as well as the unit amount of the inventory, as well as the total amount. Checking account goes up. The inventory goes up. If we look at the inventory valuation summary, we're now at the 46,940, matching out to the 46,940 on the trial balance. If we go back to the open purchase orders, we have none of them because now we purchased or received all of those items and recorded them. If I go to vendor for Epiphone, on the vendor side of things, now we can see the activity, the check that was used to receive the purchase orders and the 2 purchase orders, which have now basically been closed. If we look at the accounting transactions related to these, this is where we left off before this time frame. The first one, we had inventory that was increased. Notice we're increasing the inventory and the checking account. We'd also have to be thinking about the subledgers as well. So when you record the accounts that would be impacted, it would be a simple journal entry, which would be increasing the inventory, the other side going to the checking account, decreasing the checking account, debit inventory, credit the checking account. But as we see when we enter it into QuickBooks, that's why they have that second item tab. We would also have to be tracking this by unit. So if we posted this to the general ledger, we just have an increase of the inventory to the 39,976, and the checking account is going down here from the 105,000 down by the 30,080 to the 6790. The second inventory, same thing. We increased inventory by the 6892 in terms of a journal entry and credited the checking account. That's what the check that we wrote in order to receive the inventory is in essence doing from a financial statement standpoint. So that means the checking account is going down, inventory is going up. No impact on the income statement. There will be impact on the income statement accounts, being sales and the cost of goods sold, when we sell the inventory with either an invoice or a sales receipt. Here's the transaction there. So we got 2 items to inventory. Inventory now going up to the 46,868, and the checking account going from 67,920 down by the 6,892 to 6128. And then we had the last ukuleles. Same thing from just a trial balance perspective. We would have an increase to the inventory. The other side then going to the checking account. Inventory now going up to the 46,940. The checking account going down from 140,000, sorry, we're down here, from 61,028 down by the 72 to 60,956. Now, this inventory, though, notice when we entered the checks into QuickBooks, they forced us to use the items to do it, or that's the way we would want to do it, because that will help us to track the subledger, breaking the information out by the actual units as well as the totals. So here's our ELPs. We had started off at $400, and then we had the change of the 70 for the 400. So that's going to be the 720. So now we got 71 at 400. So we have the unit as well as the cost supporting the information on the trial balance, but giving us that added unit as well. Here's the EPSP. So we got 5 more of these that we purchased here. We had 1 last time, so now we have 6 at the 480. This is the cost, not the sales price. And then we purchased more of these EPSHs on 114. So we had 2, and then we had 14 more that we purchased. We had the ERPs that we had 5 here. And then, so this is going to be the total of all these transactions, of course. And that'll give us the total by unit as well as by the dollar amount. And the total in terms of the dollar amount, the 46,940, should match our ending total that we have on the inventory ledger. So that's a subledger for the inventory that we're tracking within QuickBooks if the inventory is turned on at a perpetual inventory basis.